So Ted and Susie, I wanted to talk to you about using your insurance for direct services for your child.
Okay.
I understand that you have Blue Cross Blue Shield PPO.
Yeah.
And is this an insurance that you purchased through your job? Is it a group plan or is it a privately purchased plan?
It's through his job.
Okay. Okay, and it's a PPO?
Yes.
Right, okay.
She does all the paperwork, no, I haven't paid that much attention.
When you're in early intervention getting direct services, one of the advantages to using your insurance is that your insurance sometimes requires you to pay co-payments for services, so visits to the doctor, therapy.
Yeah, we have a copay.
Yeah. When you're in early intervention, you have something called the family fee that you pay monthly to the state, and it's that sheet I reviewed with you, which broke down your family fee, and your fee would be at $100 a month.
Okay.
When that would be the only thing that you would be responsible for paying. Your monthly fee is the maximum you would pay. So every time you have a therapy session, any appointments to early intervention, you would not be charged a copayment because that would be covered under your family fee.
Oh, okay.
In addition to that, a lot of PPO plans, especially family plans, have very large deductibles. So once claims are submitted to your insurance might send you back an explanation of benefits that says that, yes, we will cover the claim, however, you have not met your deductible, so you're responsible for paying that claim. At that point,
Yours is like what, 1,500, I think? Something
Yes.
like that.
yes, that's quite a large.
Yeah.
Definitely.
So what would happen is when they send you that explanation of benefits, you would give a copy to the provider. The provider would use that to bill the state for services because your insurance wasn't paying for it because you hadn't met your deductible.
So do we pay them the $100 too, the provider? Is that who the $100 goes to?
That $100 would be sent directly to the central billing office. You would get an invoice in the mail every month. And when you look at your family fee report, you're going to see a sample invoice, and it's going to show you exactly how you'll be invoiced every month from the state. So that will come with like a little tear-off slip that you can tear it off and send it in, and that's the only payment you should make.
Oh, good.
Now, for example, let's say sometimes insurance companies will send you a check that's intended for the provider, and it'll say that. It'll have an explanation of benefits, and for example, let's say it's $120 intended for speech therapy services on this date, for example. At that point, you would turn that check over to the provider. You wouldn't keep that check because it wouldn't really be intended for you. It really is intended to pay for
So that's
service.
not a new pair of shoes for Susie?
No.
Okay, got it.
Darn it. So what we do initially is we get your consent, if you consent to use your insurance, and we're going to verify what services are actually covered with your insurance. We want to make sure we follow all your insurance rules, and if in-network providers are reimbursed at a higher rate, we want to make sure we use those providers first and exhaust those providers before we go out of network.
Okay.
And one of the reasons for that is your family fee is based on what the state is actually putting out every month for direct therapy services. Using your insurance sometimes will offset the cost. So for example, with your income, we discussed your family fee is about $100 a month. So for the full year, it's $1,200. Let's say, for example, you were getting one service and they bill the insurance company, and the insurance company would reimburse that provider at the state rate.
Okay.
And I'm not exactly sure what the exact amount is, but it's about $70-some. Let's say that provider got that amount, or maybe even a little more. That provider wouldn't bill the state for the remainder, for any more money, because they've already gotten what they've agreed to take from the state.
Okay.
Every month, you're going to still get a statement that'll say you owe $100. Underneath that statement, if you look on your family fee report, it'll say payment due, it could say $100. Total CBO services paid to date. That is going to show you what has the state paid out in services that are subject to fees and insurance usage. So you'll see what they've paid out. And then the last line will be minimum payment due. And that's the amount you truly owe the state at that given time.
Okay.
Is it once a month that we pay?
It's once a month that you pay. I do want to caution you with the minimum payment due. Sometimes you have to really look at your explanation of benefits and also talk with your providers and make sure that they're actually billing your insurance and getting paid and not waiting for the insurance company to respond. Because, for example, what can also happen is, like, you look at this and every month your minimum payment due is zero and you think, great, I don't owe any money.
Right.
And 3 months later, the insurance company sends you an explanation of benefits and the provider an explanation of benefits that says, we're not going to cover this service. The provider then goes back and bills the state for the last 3 months of service. And if you haven't paid your $100 every month, on that third month, your minimum payment due is going to be $300.
Yikes.
So you always want to make sure you're really staying in communication with your providers and making sure that they're actually getting paid by insurance and they're just not waiting for the insurance to process a claim.
I see, okay.
Okay. Also, if you possess a tax savings account that's attached to your insurance or is in place of your insurance, make sure you let us know so we can put in the proper precautions so that account is not depleted.
Okay. Do we have all of this?
I don't think so.
Okay.
And we're going to check for that as well. And sometimes it'll come back that you do or you don't. Sometimes families are not aware. Employers just attach it to their account. When it comes back, I will definitely let you know and give you a call and tell you about it.
They seem to change our insurance every year at work, so anymore, so hard to keep up.
Another important thing to note, at the beginning of the year, a lot of companies change insurance. If you know your insurance is changing, make sure you notify me. What I can do is, even if you don't have a card yet, I have something called a change of insurance notification that I can jot down as much information as you have and alert the state that your insurance is changing. What will happen then, if you go from one plan that has out-of-network providers to another plan, that's pretty easy. But sometimes if you go from a PPO to an HMO that's very restrictive, we don't want to have an interruption in services. And what we want to do is the state will issue something called a 45-day exception period. So for 45 days, that provider would be billing the state directly and bypassing your insurance while we figure out what to do with your insurance, what we're going to use. So just make sure you alert us when that happens.
Okay.
So with over here, who's the policy holder on the insurance?
I am.
Okay. Oh yes, we said that already. If you give consent to use your insurance, you would check over here. If you don't give consent, you would check over here. And then this says that you received a copy of your system of payments and fees. So if you can sign.
Sure.
He can sign, since he's the big policy holder.
And I ask if I can sign.
You know how it is. I'm in charge.